Hi there, welcome to SnR Investor, where we trade support and resistance. In today's video, we'll be looking at dollar cost averaging into the Singaporean dollar and Malaysian Ringgit for August 2023. Before we start to talk about Singaporean dollar and Malaysian Ringgit DCA outlook for August 2023, I would like to share with you about the SnR-way for dollar cost averaging. The SnR-way for dollar cost averaging is not an approach that is fixed by time for each month or week. So it's accumulation at specific price determined by support and resistance. So the difference between the SnR-way for DCA and the traditional DCA approach is that one is based on fixed time and the SnR-way is based on a fixed price. So some of the advantages you get by using the SnR-way for DCA is that you avoid accumulating during a strong downtrend, and when you accumulate there might be a highly likelihood of an uptrend as well. And this can help you to build larger position size at more controlled favorable prices. Here is an example of a traditional fixed time DCA plan. So every month you will want to buy $1,000 of fruit at a fixed time, and this ignores whatever the price level is at. So on the 15th of January, the price is over here and you will buy $1,000 of fruit at this price. On the 15th of February, you'll buy another $1,000 at this price. And on the 15th of March, you'll buy another $1,000 of fruit at this price. And on the 15th of April, you'll buy another $1,000 at this price. And in all, you'll get an average of dollar cost average at around this price level. If you were to use a fixed price DCA plan, the SnR-way, you will also buy $1,000 of fruit each month, but the difference here is that you will only do so at specified price level. So what happens to the unspent money if price does not touch any of these specified price levels is that the money that you intend to invest in that month will be brought over to the next month for your investment. So what you will need if you were to use a SnR-way DCA plan is that you need to have your monthly SNR level being determined. So here you have two monthly level SNR. You want to have one higher and one lower monthly SNR. So in a way, you can think of the lower monthly level as the support and the higher level as the resistance. So in January, the price did not reach any of the monthly level, so you could not be investing any amount into fruits. And on February, the price reached the higher monthly level, and you invest $2,000 into fruits. This $2,000 is accumulation of the $1,000 that is unspent from January and the $1,000 that you intend to invest in February. And in March, price reached the lower money level over here, and you'll buy another $1,000. And in April, price reached the higher money level, and you'll buy another $1,000 here. And in all, your dollar cost average into fruits will be around this price. So if we were to contrast between fixed time-based DCA and fixed price-based DCA, the main difference is that if you were to use a fixed time DCA, there's a chance that you might be accumulating your assets at an extremely high price over many months if price is to stay range bound at a high price level. The advantage of a fixed time is that it's easy to implement and you would not require much monitoring or any technical analysis knowledge of price in order to implement a fixed time based DCA. That's why the fixed time based DCA is one of the, or not the most popular investing approach that most people will use on a monthly or weekly basis to accumulate an asset. The SnR-way is a fixed price based DCA. The advantage is that it's a more controlled way of doing your DCA accumulation. It tends to help you to avoid extremely high price dollar cost averaging in. It does require effort to determine ideal price to DCA and to constantly be aware of where you need to actually accumulate your asset at that price. That's why in this monthly DCA series, I will share with you how I determine the SnR levels that I would like to DCA accumulate the asset in. Let's learn how to get our support and resistance levels. First, you need to choose the time frame of support and resistance you want to determine. So there is the monthly chart over here, there's the weekly chart, the daily chart, the 4 hours chart, the 1 hour chart, the 15 minutes chart, and the 5 minutes chart. So do not get too overwhelmed by the different time frames. They are mainly providing more zoom in details of the price activity for that period of time. So you can see over here, you have the monthly time frame. You can see a very broad macro view over a few years of how price behaves. And if you were to zoom in into this region on the weekly time frame chart, you can see that you get more granular details of how price behaves during this period. And if you were to zoom in further into this small section of price action, you can see more fine details on the daily time frame chart. So after you have choose your time frame to draw your support and resistance, you want to find the levels by looking for clear A, whereby there's a price of up candle close and price of down candle open, and a V, where it's the price of a down candle close and a up candle open on the line chart. So A is where we look for resistance, and V is where we look for support level. So a common misconception is that people will determine their support and resistance from the candlestick high or low price level. So remember, it's important that you do not draw your support and resistance from the candlestick high or low price level. So for example, this is a Bitcoin monthly chart. I have plotted the line chart as well as the candlestick chart over here. So first we want to look for the resistance, which will form a price of an up candle close and a price of the down candle open. So here you can see that there's A on the line chart, and this is a resistance. And for the support, we want to look for a V shape, whereby it's the price of the down candle close and an up candle open. So here you can see a down candle close and an up candle open, and on the line chart you can see there's a V shape. So here is another support, and here it's a bit hard to see, but if you were to stretch the price range bigger, you will most likely see a V shape as well. And over here you can see there's another V shape as well, which is another potential monthly support level too. I have to emphasize that it's very important when you use SnR not to just buy at support and sell at resistance. Although that is the idea of support and resistance, is to buy at support and sell at resistance, you do not want to just do it blindly. You want to wait and observe how price react at support or resistance before you buy or sell, because price can simply break support or resistance. That's why you want to wait for price to show signs that it is reacting off a support or resistance level before you make any buying or selling decision. So remember to look for signs before making any decision to buy or sell off support and resistance. This is very important. Let's look at the Singapore dollar and Malaysian Ringgit chart. So you can see here, this is the monthly time frame chart of Singapore dollar and Malaysian Ringgit. You can see that it has been on an uptrend over the years, and recently you can see that it has reached new highs as well. So to draw our support and resistance, we need to look for our A and our B. So over here at the highest point, you can see on the line chart there is a A. So we will mark out by having a line drawn over there. And next we look for our V. So here you can see another V on the line chart. Next we look for another V. Here we can see another V over here. And a previous resistance over here, A over here, a previous resistance that price has broken above a few months ago and to reach this new all-time high. So here you have your support and resistance drawn on the money chart for Singapore dollar and Malaysian Ringgit. So here I prepared a slide with the price levels marked out for the support and resistance on the money time frame for Singapore dollar and Malaysian Ringgit. So you can see that we have a potential resistance level at 3.45 ringgit if the July candle closed as a down candle. So this will become a new monthly resistance level that we will want to look at. If price were to go above this monthly resistance level, there is a chance that the price could go higher. For now, if price were to close below 3.45 in July, there's a higher likelihood that price will want to revisit the support levels below. So some potential support levels that we would like to pay attention that price might be able to react or bounce off to reach back up to the resistance is 3.34 ringgit, 3.312 ringgit, and 3.248 ringgit. So these are potential support levels that price might be able to bounce off and to reach new highs. So here I've annotated the levels. So you can see I use R for resistance and small letter S for support, and M for monthly and W for weekly. So sometimes the monthly resistance and the weekly resistance can coincide together at the same price level. So in summary, the August 2023 outlook is that we are looking at a possible downtrend on the Singapore dollar Malaysian Ringgit price action. I will look to continue buying Sing dollar if the weekly or money price close above 3.45 ringgit, and at this point it's quite good and healthy to take some profits below 3.45 and above the support mentioned earlier. So the best price I would want to start to dollar cost into Sing dollar again is near or below ringgit 3.34. So it's safer to only DCA into Sing dollar when price react as potential support with weekly or monthly price closing above. So it's very important that the price has closed for the week. So you are looking at the Friday weekly closing price in Forex market. So in summary, if price is above 3.45 ringgit, I would want to DCA into hoping that the price will be making newer highs. And I would want to DCA if price were to go below or at 3.34 ringgit. So now is a good time to take some profit if you are in Sing dollar at or near 3.45 ringgit. So it's always very important, a disclaimer over here, that the support and resistance can be broken. So you do not simply place a DCA buy order at stated support price levels. You need to wait, very importantly, for a weekly or monthly candle to close above the support level, which will indicate that this is a potential support of price before you actually DCA into the asset. So how you confirm a bounce off support and resistance? So you need to ask, is there a candle close above the support and resistance level? So if we are looking at the monthly time frame, and with the monthly support level, we would want the line chart to be closing above the support level, and for candlestick chart, we would like the candle price close above the support level as well. We have reached the end of our DCA monthly outlook series for Singapore dollar and Malaysian Ringgit for the month of August 2023. So this is a monthly series, so I'll see you at next month's update. So if you like what you have heard, please give this video a like and subscribe to receive more updates